Welcome to The Explainer. Right now, the global economy is sending some seriously mixed signals. We're seeing stock markets soar, while the foundations underneath seem to be cracking. The AI revolution is crowning new kings before the old ones have even settled on their thrones. We're living in a world of contradictions, and today, we're going to try to make some sense of it.
So, what is it? Are these just a bunch of mixed signals we can ignore, or is this a clear warning sign? To figure that out, we're going to have to look underneath the headlines in 4 key hotspots. Our first stop, and maybe the biggest puzzle of them all, is China. On one hand, China's stock market is on fire. After years of staying away, global money managers are finally jumping back in, and they're chasing a pretty incredible market rally. But if you peel back that shiny surface, well, you find a much more complicated and frankly worrying economic story.
What we're really seeing is this total split between how the market feels and how the economy is. The bulls, the optimists, they see government support and investor hype. But the bears, the pessimists, they see these really deep fundamental weaknesses that just aren't going away. So the billion-dollar question is, which side has it right?
And this whole contradiction was captured perfectly by one recent number. You probably saw headlines screaming about this, a nearly 20% jump in industrial profits. On the surface, it looked like proof that Beijing's economic fixes were finally starting to work.
But here's the real story behind that number. See, that 20% jump only looks so good because it's being compared to a total collapse the year before, when profits actually fell by almost 17%. So this isn't really a sign of strong growth. It's more like a bounce from rock bottom.
And that one statistic really pulls back the curtain on the huge challenges China is facing. You've got prices falling, that's deflation, and it absolutely crushes profits. At the same time, regular people aren't spending, the massive property sector is still dragging everything down, and manufacturing, it's been shrinking for 6 months straight.
At the end of the day, market excitement can't run on fumes forever. It needs real economic growth to back it up. As one strategist put it so well, at some point, the real economy has to deliver. And for China, that point is coming up fast.
Now, that same theme of market hype versus reality is also playing out big time in the US, where a major contradiction is reshaping the entire AI revolution.
So for years, we've had this handful of tech giants known as the Magnificent Seven, and they've dominated the market, driving almost all of its gains. But the AI trade, it's evolving way faster than anyone expected, and that exclusive little club is already being questioned. So here they are, the names that built the very foundation of the AI boom. Alphabet, Amazon, Apple, Meta, Microsoft, NVIDIA, and Tesla. They're the ones who invested billions in the infrastructure that made this whole revolution possible. They were definitely the first movers. But now, strategists are starting to propose new groupings. Some are talking about the Fab Four, that's NVIDIA, Microsoft, Meta, and Amazon, as the real core of the AI play. Others are adding new challengers to the mix, like Broadcom and Oracle, companies that are expected to thrive as AI expands. People are even asking if Apple and Tesla, with their different focuses, still belong in that top tier at all. And that's because the whole narrative is shifting. It's moving from the companies that built the infrastructure to the companies that are going to win with the applications. We're talking about innovators in fields like healthcare, product design, customer engagement. The big question isn't who built the highway anymore, it's who's going to build the most successful businesses on top of it.
Okay, let's zoom out for a minute. Because not all market contradictions are driven by pure economics. Sometimes they're fueled by these deep-seated political tensions, and they can erupt in the most unexpected places.
Just consider this. You have a cricket final between 2 nuclear-armed rivals, India and Pakistan. The stakes are always more than just the game. So when India wins a decisive victory, you'd expect a huge celebration, right? On the surface, that's all it was, a game.
But what happened next had absolutely nothing to do with sport. Despite winning the championship, the Indian team refused to accept the trophy. There were no traditional handshakes with their opponents. The victory was met with a political statement, not a celebration.
This is just a perfect real-world example of geopolitical risk. When India's prime minister tweets about the win in the context of military operations, it sends a crystal-clear signal. For investors, this is a massive red flag, a reminder that these deep-seated conflicts can ignite without any warning, creating instability that can ripple through regional markets and supply chains overnight. For our final case study, we land in Hong Kong, a city that really embodies all these conflicting forces at once: economic, political, and even generational. This number right here, it symbolizes Hong Kong's new reality. It's the loss posted for the second straight year by a huge property developer, New World, and their struggle has become a cautionary tale for the city's once untouchable tycoons.
See, their family empires are being squeezed by a perfect storm. First, you've got the crashing property market and a major economic slowdown. Second, Beijing is tightening its grip on the city's economy and politics, which means these families just aren't as powerful as they once were. And third, a whole new generation of leaders is taking over, and they're facing challenges their parents never could have even imagined.
So after this tour of global hotspots, from the markets of Shanghai to the tech hubs of Silicon Valley and the boardrooms of Hong Kong, what's the big picture? What's the takeaway?
From China to the US to Hong Kong, the defining feature of today's landscape isn't one clear trend. It's this series of powerful, conflicting forces pushing up against each other. It's market hype versus weak fundamentals. It's the old guard pioneers versus the new innovators. And it's these surface-level events that are masking deep underlying tensions.
So here's the real takeaway. To navigate this world, you have to embrace the complexity. You have to look past the easy headlines, that 20% profit jump, the Magnificent Seven, the cricket score. And you have to start asking, what's the contradiction hiding underneath?
And that really is the key question for any investor, leader, or just observer trying to make sense of it all. Because in an environment this complex, the biggest risk isn't being wrong. It's not seeing the full picture. Thanks for joining this explainer.